Like when I'm just going through this standard, like again, I just today and yesterday, like in the past 2 days, these are the things which are circulating related to SA 600 again, where NFRA has already proposing to issue International Standards on Auditing 600 to be implemented in replacement of existing SA 600. Nothing but SA 600 is going to be replaced with a new SA 600, where there are requirements regarding the main group company auditor. We generally call him as what? Principal auditor. Where the main group company auditor has a requirement, the main group company auditor has a requirement and has a responsibility for the opinion expressed even in respect of components. Like until now, what we know in SA 600, the principal auditor is responsible only to the extent of performing procedures related to coordination between the principal auditor and component. Not more than that. But the revised standard is casting a responsibility on the principal auditor that he is only responsible even for the true and fairness of the components financial statements presentation. And even in the standard itself, they are trying to give a right to principal auditor to access to working papers to review whether the work performed by the components are correct or not. One more major, principal auditors are also responsible to review competence of the other auditors, which is not there until now. SA 600, if you see, competence of other auditors, generally you don't have to check unless he is not a member of ICA. When you're doing audit of Indian companies, unless he is not a member of ICA, then only we generally check competence. Otherwise, we don't check competence of other auditors. Principal auditor is now responsible. What ICA is arguing is, there are more than 7,000 listed entities. There are more than 7,000 listed entities that are there in India. And there are close to 2 lakh unlisted entities. There are close to 2 lakh unlisted entities, nothing but unlisted companies. Out of this 2 lakh, approximately 96,000 audit firms. And out of this 2 lakhs, by the way, more than 50% are subsidiaries of these listed entities. Like whatever 7,000 entities were there, they have so many subsidiary companies which are all unlisted. The total volume of unlisted companies are close to 2 lakh. And the ICA is arguing, out of this 2 lakh, 50% of them are already subsidiaries of listed entities, which are already controlled by listed entity auditors most of the times. They only dictate the terms. Small and medium practitioners who are there, close to 96,000 small and medium practitioners, their interest will be badly affected. Their interest will be badly affected if at all principal auditor was given the power to determine competence of the other auditor. If at all principal auditor was given the power to determine competence of other auditor, this will be affected. Moreover, if principal auditor is made responsible for even component financial information because it is included in consolidation, if at all we make him responsible, there is a high possibility that the principal auditors will insist on the companies to replace component auditors as per their choice. And you know what? 7,000 listed entities were there, right? Forget about the number. All these 7,000 entities put together, there is something called market capitalization. These 7,000 companies have some market value. 70%, not even 70, 75 to 80% of the market capitalization of listed entities, they were performed only by 10 firms in India. The audit is performed by 10 firms. Of course, out of them, 3 were networks, 4 or 5 were networks. Only 10, nothing but I can say 10 networks are operating. Let us assume I can say some 5 or 6 network firms are there, some 4 or 5 normal firms were there. Only 10 firms in India is controlling 70-75% of the listed entities. Not 75% of listed entities, sorry. 75% of market capitalization worth of entities. You're getting it? Close to 50%. 50, or I can say close to 60% is audited by only 4 networks. This one, Deloitte, KPMG, EY, and GT. Getting it? GT. Only these 4 firms put together Deloitte, KPMG, EY, these three put together itself were controlling 50%, is close to 50% of the market capitalization that is there, the entire stock market in India. All the companies, 7,000 companies multiplied by number of shares, multiplied by you take market value of each share. That's called market capitalization. In that 50% is just audited by 3 network firms, Deloitte, EY and KPMG. So this raises concerns. What institute is arguing is, I know they do audit competently, but fine. But why are there so many frauds happening even in the clients which they are doing audit? Best example recently CCD. Who is the auditor? KPMG is the auditor. So many a time Satyam scam, ENY is the auditor, PwC is the auditor. So many scams that were being detected in various these companies, obviously scams are also happening. And moreover, principal auditors should not be given the authority to determine the competence of other auditors, because other auditors are also a CS and COPs, which ICA determines, which ICA is this one, which ICA is already assessing them. But ICA, NFRA argument is ICA assessment is not proper. Peer review and all for namesake only are doing. Literally what is happening inside peer review, everybody knows. Peer review and all is not serious. Out of 100 peer reviewed firms, maybe 1 or 2 only will be seriously done, the reviewer, by the reviewer. Majority of the cases, it is not that seriously happening, is what the industry talk. That is the reason ICI was given lesser powers in respect of regulatory functions. Most of the regulatory functions are now delegated to NFRA. So NFRA is a regulatory, ICI is also regulatory. For all small entities, unlisted entities, ICI can monitor through QRB, by participation in QRB, all that. So literally considering all these changes, there is a huge amount of demand for workforce in big entities. Definitely for in big entities, there will be high scope of, like high necessity of work, because here works will be, if at all that ISA proposed standard is going to be implemented, for sure they'll implement. Whatever concerns ICA raises or some other bodies raises or small and medium practitioners association, whatever there is, they listen, but they don't change. So they want ultimately supremacy in the audit quality. So they will implement all those standards. Accordingly, the big 4 entities or big entities, these top 10 firms which I tell, who are the auditors of 70% of the market capitalization of Indian listed entities, they naturally influence the listed entities and their subsidiaries to appoint auditors of their choice. Generally, they appoint the auditors of their network firms. Automatically, what happens is, more demand for more network firms will increase. These small and medium practitioners, they have to establish, they have to enhance their standards and join with these networks. And that's how opportunities will, just that opportunities will be like removed here and they'll be added somewhere. But the requirement of workforce will be same. To me personally, what I personally feel is, if a medium and a small firm do an audit of listed entities, they will do this audit within 500 man days. 500 man days, for example. If a listed entity audit is given to a medium-sized firm, for example, they generally finish this audit within 350 to 500 man days. Man days means what? Suppose every day 10 team members are working, 150 days you worked. 50 into 10 is equal to 500 man days. Simple as such. Generally, they only spend 500 man days, but big 4 entities spend close to 1,500 man days. They spend close to 1,500 man days. Literally speaking, if audit is removed for small and medium entity and given to big 4, the demand will increase by twice, not thrice. Though the work is increasing by thrice, demand will increase only by twice. Why? Because in big 4 and all, whatever the amount of work 3 people do, only 2 people will do. Because work overload will be there. In these all big entities, work will be overloaded. So on that logic, demand will increase by double, technically speaking, for audit profession. So which is actually a good sign. If at all the audits, they were all diverted to these entities, all big entities and all, employment opportunities for CS will increase, technically speaking. Because so long all these days they were in small and medium sized entities, they are discussing about, firm will lose the work, another firm will get. But look at the ground reality, what happens. The demand for the entire professional workforce will increase. Because the big 4s do extensively the documentation, extensively the procedures. When they're doing so extensively the documentation and procedure, the manpower required for them is totally different. For filing a simple IT return also 4 or 5 people will be involved. Review people, that people, this, executor, reviewer, a quality control reviewer, documentation reviewer, like that some 4 or 5 different levels of people will be involved. But normal audit firm, if at all IT return has to be filed, one article will fill it, partner will see that, partner will not even see that the entire ITR. He will just look at the final XML, whatever that PDF, draft PDF, that too briefly. And he will say, okay, this fellow will file immediately, over. The same activity will be done by big entities who have well established quality control policies and procedures. They have to do as per the quality control policies and procedures. They have to perform each and every requirement of the standard. They need to document requirements of the standard. So this is obviously an additional process. So this creates more opportunities. If at all proposed ISA 600 is implemented, that creates definitely more opportunities for the profession. Forget about shifting of work from one firm to another firm. Work will be shifted, but opportunities as a whole will increase. Because the way they implement quality control policies is different, obviously. Like many of us would have worked in small and medium firms. These firms will not even have quality control policies. They will not have quality control policies. The articles working there, the partners working there, people, they themselves don't know what you mean by quality control policy. They blindly go based on last year working paper, some work they do, they just file. If at all you specifically ask him, that and all not required practically, that and all not required realistically, this is enough. If you follow each and every requirement of the standard by listing it out, and if you follow, definitely audit quality can be enhanced like anything. Each and every standard has a specific requirement. For example, in the context of requirement, we will discuss SA 540. Okay. So that's it. So if at all you're getting any news around news about this, like small and medium practitioners are going to lose all this, nothing to worry. That's one side of the story. But the other side of the story, I'm telling you, I'm literally talking about the number of mandates that generally these entities perform and the number of mandates that these entities perform. You compare in absolute sense how exactly happened the process, then you will understand, is it good or bad for the profession as a whole. Fine. So stop this.